Today, we will discuss legitimate methods for attaining income tax savings for small and medium-sized businesses and their owners. My name is Chad Cummings, and I'm an attorney and certified public accountant serving clients in matters of business, tax, and commercial law throughout the states of Florida and Texas. I am Chief Executive Officer of the firm Cummings and Cummings Law. I also teach business law at Florida Gulf Coast University and hold 4 degrees, including 2 law degrees, as well as a variety of tax, financial, and accounting credentials, which I apply for the benefit of my clients in my practice of law. Our firm website is www.cummings.law. Income deferral is a strategic approach that businesses can utilize to manage their tax liabilities effectively. This technique involves postponing the recognition of income to a later tax year, thereby reducing the immediate tax burden. The process is often complex and requires a comprehensive understanding of federal tax law, making it essential for businesses to consult with an experienced attorney and CPA. Many business owners mistakenly assume that income deferral is a straightforward process. However, it involves meticulous planning and adherence to specific tax laws. The Internal Revenue Service, or IRS, has stringent rules governing income deferral, and noncompliance can lead to significant penalties. Therefore, it is crucial to engage with professionals who can provide tailored advice and ensure compliance with all applicable Internal Revenue Code and Treasury regulation provisions. One of the primary methods for deferring income is through the selection of an appropriate accounting method. Businesses typically choose between the cash method and the accrual method of accounting. Each method has distinct implications for income recognition and tax liability, and the choice should align with the business's financial strategy and tax planning objectives. Under the cash method, income is recognized when it is actually received, whilst expenses are deducted when they are actually paid. This method can be advantageous for businesses seeking to defer income, as it potentially allows for greater flexibility in timing the receipt of income. Conversely, the accrual method of accounting recognizes income when it is earned, regardless of when it is actually received. This method may be less flexible for deferral purposes, but provides a more accurate picture of a business's financial position because of the so-called timing principle, or also known as the matching principle. Establishing and contributing to retirement plans is another effective strategy for deferring business income. Retirement plans such as 401ks or SEP IRAs permit business owners to make tax-deductible contributions, effectively reducing taxable income for the current tax year. These contributions grow tax deferred until they are withdrawn, typically during retirement when the individual may be in a lower tax bracket. However, the rules governing retirement plan contributions and retirement plan administration are complex, and there are limits on the amount that can be contributed each year. Additionally, early withdrawals can result in significant penalties. Therefore, it is highly advisable for business owners to work closely with an attorney and a CPA experienced in this area of law to ensure that their retirement plan strategy aligns with their overall tax and financial objectives and complies with IRS regulations. Deferred compensation arrangements are another tool businesses can utilize to defer income. These arrangements involve setting aside a portion of an employee's income to be paid at a later date, typically upon retirement or termination of employment or certain other occurrences of key objectives. These deferral mechanisms can provide significant tax advantages for both the employer and the employee, as the income, again, when executed correctly, is not taxed until it is received. Implementing a deferred compensation plan necessitates careful planning and documentation to comply with IRS requirements. The complexities and contours involved in structuring these arrangements require the expertise of an attorney and CPA to ensure that the plan is legally sound and tax efficient. Failure to adhere to the applicable regulations can result in substantial penalties and the loss of the intended tax benefits. Another strategy for deferring business income involves the strategic timing of income and expenses. By accelerating expenses and deferring income, businesses can reduce their taxable income for the current year. This approach requires careful analysis of the business's cash flow and financial projections to ensure that it aligns with the company's overall financial strategy. However, this strategy is not without risks. Over accelerating expenses or underreporting income can lead to cash flow issues or unintended tax consequences. It is essential for businesses to work with an attorney and CPA to develop a comprehensive plan that balances short-term tax savings with long-term financial stability. Installment sales can be another effective technique for deferring income, particularly for businesses involved in the sale of large assets, especially real estate. Under an installment sale, the seller receives payments over a period of years rather than in a lump sum, allowing them to recognize income gradually as payments are received. This can result in significant tax savings by spreading the tax liability over a period of years. However, installment sales are subject to specific IRS rules and reporting requirements. Businesses must carefully structure these transactions to ensure compliance and maximize the tax benefits. An attorney and CPA can provide invaluable guidance in navigating the complexities of installment sales and developing a strategy that aligns with the business's financial goals. Deferring business income for tax savings is a sophisticated strategy that requires careful planning and a thorough understanding of federal and state tax law. While the potential benefits can be significant, the complexities involved necessitate the experience of an attorney and CPA. These professionals can provide the necessary guidance to ensure compliance with IRS regulations and to help to optimize the business's tax position. Ultimately, the key to successful income deferral lies in developing a comprehensive tax strategy that aligns with the business's financial goals. By working closely with an experienced attorney and CPA, businesses can navigate the intricacies of income deferral and achieve meaningful tax savings while maintaining compliance with all applicable laws. Again, my name is Chad Cummings, and it was a pleasure sharing this information with you today. Should you have any questions regarding the content of this video or of any of the other videos that I've shared, please feel free to visit my firm website. It's www.cummings.law to schedule some time for us to speak. In any event, I hope you found this information helpful, and I hope you have a wonderful day wherever you are, and I look forward to the opportunity to speak with and perhaps even work with you very soon.